Thinking Byzantine here. Today we'll be talking about some news concerning AT&T, and I will continue to talk about my thoughts on AT&T as a company ever since I released that AT&T stock analysis in early December. But before we get into all that, I'd like to say that I am not a professional investor or any type of professional in that matter, and this is all my own opinion, so please do your own research before making any financial decisions. Now let's jump into this article. So to start out with, AT&T and AT&T's WarnerMedia intends to merge with Discovery in a $43 billion deal, but also AT&T plans to cut dividend from that deal. So let's see. AT&T will exit the so-called list of dividend aristocrats amid plan to lower its payout by as much as $7 billion in the wake of its media asset merger with Discovery. Okay, AT&T will cut payout ratio by more than 20% in the wake of its media asset merger. Okay. So its dividend payout ratio was 63% in the previous quarter, and that dividend will be reassessed to account for the distribution of WarnerMedia assets into a new company. The remaining AT&T assets will remain to give shareholders a payout ratio between 40 and 43%, and paid an anticipated free cash flow of around $20 billion. Let's see, let's get through the bulk of this article, and we'll get into my thoughts on AT&T as a company. This is sort of a follow-up to the stock analysis from a few quarters back. Let's just continue on. So, a dividend cut from $15 billion to $8 billion. So, currently, I believe AT&T pays around $2 and some change. So, look for a dividend of around $1.10, $1.08. So it'll be $1 and change with this cut. Let's see. Okay. So this is Jim Cramer's opinion on it. So yeah, in that deal, AT&T will take $43 billion in cash and securities in exchange for its WarnerMedia division, which includes basically HBO Max, probably CNN, and just any of their media assets in general. While Discovery is just going to bring in whatever they got, so the Discovery Channel, probably TLC, Food Network. So AT&T shareholders will own 71% of the combined group, the company said, which will likely generate $52 billion in revenue and a combined shareholder subscriber base of nearly 150 million. Prior to the Discovery deal, AT&T paid a dividend of $2.08. So yeah, okay. So I was right in that estimate. So I think, let's see, 7.15 cut. So probably $1.10, $1.11. I think that's a good estimate. But anyways, let's just dive into my old little analysis. So I guess we should start with the bearish thesis. AT&T's large amount of debt, its DirecTV segment was declining, it was hurt by COVID, it was hurting its business, stronger competition, and it had a complicated business. Well, let's start with the large amount of debt. AT&T acquired more debt from the 5G auction spectrum thing, so $23 billion in added debt, and I guess with the $43 billion from the WarnerMedia merger / sale / spinoff, whatever you'd like to call it, should cover that plus some. So they still have a large amount of debt. It's probably over $100 billion still. And then AT&T finally got rid of, or they're spinning off some of DirecTV by keeping 70% of it in this Motley Fool article. So let's just go over this deal real quickly. So originally, AT&T paid $67 billion in that DirecTV acquisition from 2014, but in the new deal values the current business at $16.25 billion, And let's see what they get out of this deal. So AT&T will get $1.8 billion in cash, and they'll get rid of $6.2 billion in debt. So that's more debt that's being get rid of. And they're moving $200 million of debt to the new company's books. So that's something that's been addressed since that time. And let's look at their COVID movie production. Well, to address that, the AT&T has been releasing their movies in HBO Max to encourage subscriptions to HBO Max, and been releasing the movies in the theaters at the same time. So this full article says aren't hurting. HBO Max movie releases aren't hurting the Warner Bros. Box office. Let's see. Despite fear, it does, however, and contradiction may have been a very smart one. Looks like I can't see the rest of it, but that's the gist of this article. And then let's continue looking on. The impact of COVID. Okay, stronger competition. Well, that's true, I guess. And as we've seen at auction, Verizon is definitely spending a lot of money to acquire Spectrum licenses. And complicated business. Well, they've been divesting a lot of business segments. So I guess you could say that AT&T, with the new cuts, it's mainly going to have, it's just going to be their communication business, and then whatever's left of their Latin America business. Because they also, previously, I mentioned it in my stock analysis, they sold off their Puerto Rican and Virgin Island assets. So they have been divesting some Latin American assets over time. Now let's go to the bullish thesis, and when COVID goes away, their segment should recover a bit, and I think that's best shown by looking at their recent earnings Q1 2020 report. And as we can see, they beat in all segments, or additional postpaid phone, revenue, adjusted EPS. The key takeaways from this earning. Okay, AT&T posted 2.7 total domestic HBO and Max and HBO subscriber net adds. Okay, let's continue, and I guess that's all I want to say from this little quick Investopedia article. And then they've, because of these earnings and such, the company now says it expects 120 to 150 million HBO Max and HBO subscribers by the end of 2025, up from 75 to 90 million. So they increased their projections of growth for HBO Max. And let's take a quick look at the T stock and Discovery stock, and then we'll continue. I'll give you my opinion still. But let's see. Before we do that, I just want to see if there's anything else I'd like to address. I guess we should address the strong dividend yield. I guess. Well, I guess actually I talked about the dividend. I'm sorry, I'm saying I guess a lot, but yeah, with the cuts, the dividend yield's probably going to be closer. Well, you gotta take into account that when the spinoff happens, AT&T's price will probably drop to mid-20s, low 20s. So I'm guessing even with that cut, after the drop in price anyway in the merger, I'm guessing AT&T's dividend yield will be around 4 to 5%, so close to Verizon's current dividend yield. But anyways, here's AT&T's current stock price. It's at $32.06. Early in the day, it traded as high as $33.73. And here's Discovery. It's traded as high as $39, and it's now at around $34. Now, I can't really say anything about Discovery Communication, as I haven't really done much research about them. But is T still a stock you should buy? Well, I did my calculations based on dividend discount, and I would assume based on this cut, that I would need to redo the dividend discount, but it's certainly not going to be the fair value just based on the dividend. It's not going to be $39.29 anymore, since they're going to be cutting their dividend. So yeah, I think low 20s is a good price target for AT&T post-merger. But should you keep buying AT&T now? It depends. As we go back here, we need to find the part I was talking about, or that's going to be irrelevant to this discussion of buying AT&T today. Right here, 71%. Well, it depends on the ratio, on the amount of depends on the price per stock of the new company and how much stock per share you will be receiving per AT&T share. Because the news of a dividend cut would have been a big shock to AT&T's stock, in my opinion. But it depends. If, let's say, this new company share price is at $100 and AT&T shareholders get 0.71 shares of this new company, then that's a $71 right there. But we don't know the exact conversion from T stock to this new Warner Brothers Discovery company stock conversion. But all we know is that in total that AT&T shareholders will control 71% and Discovery shareholders will control the rest at 29%. But this new company, like if you're going to buy shares of this new company, I think it could be worth it, because Discovery is mostly reality TV shows, in my opinion, and maybe some nature documentaries here and there. So maybe that synergy between reality TV and HBO's movies and TV series will make a good synergy bundle. Sort of like Hulu and Hulu and Disney Plus. That type of synergy. So this new company, I would value it at around $60 to $80 billion at the merger. If HBO Max continues having good growth numbers, I think that would be the range of the valuation of that new company. But that's just all speculation, and we will not really know the true value of this combination company until the merger happens. So getting AT&T shares, I'm not really sure. I mean, if AT&T shares drop back to its 1-year low of let's see, $26.35, I think that'd be a good time to buy, as that could give you a margin of safety depending on the valuation of this new company and the dividend cut, and the fact that maybe some of their debt's going to be paid off with the money that they received from these deals that they have been doing. But I'm just overall, AT&T is it's just a watch. I'm not sure if I would consider it a buy or sell yet, but that's just all my opinion. Now, in the comment section below, tell me what's your guys' opinion on this deal and on AT&T stock in general. This is Thinking Byzantine, and have a good day.